Everybody, today is Friday the 30th of August 2019, and we had an interesting month here. We finished lower overall, but it wasn't nearly as bad as it had been this past week. Of course, we saw a nice bounce back. Semiconductors up 4%, rest of the market's up about 2% or so, and volatility, as you would expect in a advancing market, did decline. So let's take a look here. We're starting out actually with the 30-minute chart of the S&P 500, and this basically encompasses the month of August. August begins right about over here. So this is why we were down, is those first few days of weakness, but it's been a choppy month. Really a big range here, 282-ish up to about 293, 94. When we back it up to the daily time frame, you can see we're stuck right below that declining 50-day moving average and back above the 20 and at the high end of this range that we've been in. So this is, of course, the range that we're in. I was thinking that this market would have a drop down towards the volume weighted average price from that December low, which is, of course, also, we've noted several times, also the place of the 200-day moving average. That failed to take place, and now we are again at the high end of the range, and the range that's been important really for the last year now, the high end of this range, that is. The question is was this a bull trap and we're going to see this market decline, or are we going to be able to recover? And your guess is as good as mine. Right now, I'm looking at the intermediate term time frame, again, that 30-minute, and I know that I don't want to chase the market in either direction up to the top end of this range, and I don't want to be shorting down near the lows, and anything in between. What I'd like to see, for a bullish scenario, is maybe we would pull back down towards that 5-day moving average, kind of create a higher low to trade against, and then perhaps this market could break out. But realistically, right now, I don't have a clue. And that's why I'm staying focused more on the individual names. One name I had mentioned this week on Yahoo Finance was ATVI. I like this one. Take a look at that. There's a link to it. So I won't go through that again. We also got involved this week in Home Depot, which has been a real nice winner, better than expected for me, in that we had gotten involved over here on Wednesday, and it really took off nicely on Thursday, and then added to that today. And also Walmart, which is getting ready to break to all-time highs. We're long that one as well. I think these, there's still great opportunities in the individual names. Meanwhile, the Nasdaq also in a choppy range here this month. We're right at the declining 50-day moving average. We're above the 200-day moving average. The 20-day moving average is going sideways. To me, it's just saying, be cautious overall with the market. Now, in my opinion, is not a good time to be trading the indexes unless you're probably a day trader. For these swing trades, there's just been too many gaps in both directions that can really hurt you overnight. That's the way I'm playing it. I don't have the best feel for the market right now. So again, the individual stocks are where I think the better action is. The Russell 2000, you look at it on this 30-minute chart, it's starting to look like maybe it's going to make a higher low and break this little downtrend line. But you go back to that daily time frame, we're still stuck below a declining 200-day moving average, which is below a declining 50-day moving average. And we really still have a pattern of lower highs and lower lows on this daily time frame. So it's going to need more than a trend line break from the 30-minute time frame to get it positive. That would get it more neutral, I think, if we were to get next week back above this conjunction of the 200-day moving average and the volume weighted average price from December. But again, you just have to treat this market cautiously and each stock based on its own merits. There are stocks in great uptrends, and there are other stocks that are, obviously not doing as well. The semiconductors, back to the top end of this range it's been involved in as well. That 50-day moving average is still rising here and is in the middle of this range. So the range has an upward slope. Is it going to end up being a bear flag that declines further? I honestly don't know. There's nothing here telling me that I should short it up in this area. We are holding back above the volume weighted average price from the peak, so that's a positive that you could look at. And as long as we're above 113, let's say 112.5 to 113, I think intermediate term we're at least neutral. And the biotechs, however, still are the worst looking, I think, technically. They're stuck below a declining 20, 50, 200-day moving average. Volume weighted average price from the December lows. You go over to the 30-minute time frame, they're still below a declining 5-day moving average. In order for this group to become more neutral in the intermediate term, it's going to need 104 and a quarter or better. Financials survived what looked like could be a pretty damaging breakdown this week. Had they broken down below this recent support at 26-ish, convincingly, it could have had, I think, disastrous effects for the market. We have a declining 20-day moving average, we're above it. We have a declining 50-day moving average, we're below it. There's a lot of indecision in this market. Each day I look at stocks and bring them subscribers to lay out ideas, like CSIQ is one that we're looking at for next week. We're involved in KTOS. We just got stopped out of Newmont Mining in here today. Anyways, there's still opportunities there. If you're not familiar with Alpha Trends, please take a look. And I appreciate you tuning into this video. Enjoy your long weekend, and I'll talk to you next week. Thanks.